All right, welcome to the Breakout Watchlist video for July 11th to July 15th. In this video, I'll be covering the top 10 setups that I'm watching going into next week. Each of these setups either have strong fundamentals, strong group strength, or volume patterns that lead to stronger uptrends. This video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the stocks. Here are the 10 setups that we'll be covering today. As you might notice, there are some groups that are popping up more than once: China, solar, and biotech. Those have been the strongest three groups in the market right now. And if we're trading, we want to be trading the strongest stocks in the strongest groups as the market's starting to turn up. So enough time spent here, let's get to the charts and break down these setups. The first stock that we'll cover is actually not from one of those groups. It's Bumble, BMBL. This is in the internet content group, 109th out of 197. So not super strong group, C+ group strength rating right there. It has a 74 overall composite rating with an 89 individual relative strength rating. Ideally, both of those are a little bit higher. But what we want to notice from this is we have two high volume moves on earnings, March 9th and I believe May 12th was the other one, where we saw a gap up on the highest volume ever here, ran up into this $30 area, and that's where sellers stepped in. You see kind of built out a pivot here, and as the market rolled over, it didn't have the strength to get through this area, and it rolled all the way back to 1762. So that's why stops are important. This was a stock that I was trading as it broke over 30, but got stopped out as it was coming back. This time around, we move up and the market actually rallies while we get up to that 30 point. So it broke over 30, kind of a little bit of resistance at the 200-day simple moving average. The market also played a part in that kind of pullback, and we got some choppy, loose action, which not very tradable through here. But recently we got a break back over the 8 and the 21 EMAs, closing at the high of the day on Tuesday. Continuation on Wednesday, higher highs, higher lows, closing right at the 200-day simple moving average. And then Thursday and Friday, very, very tight action. So we have 3 days of highs right around the same price, 34.63 area as a potential entry point. Both of those days came on less than average volume, which is what you want to see when a stock is consolidating, again, right above that declining 200-day simple moving average. So looking for a break over 34.50, 34.60 as a potential entry point. The next stock that we'll cover is from the biotech group. It's BMEA. Biotech's 29th strongest out of 197, so that's an A group strength rating. I'm not going to do that for every biotech stock that we talk about, but it is a group that we want to be focusing on. This stock has an A+ accumulation distribution rating, meaning many of the heavy volume days come on up days, and then as the stock sells off and pulls back, it's usually on lighter than average volume, which is exactly what we want to see. Quickly, the stock has rallied from $2.84 all the way up to $12. Very, very strong move off the lows. And you can see this volume really picking up as we rallied through that area, partially due to the group strength, partially due to the individual stock. It might be a little bit early to break over 12 with a lot of power, just because from a move from basically $3 to $12, you would expect a little bit more time digesting that move. So it might be a little early, but I wanted to throw this on your radar because I haven't seen it posted on Twitter or StockTwits, anything like that. So as long as this stays above this rising 21 EMA and above $10, it's a stock that I want to have just like on a watch list. But you can see, looking to the left of the chart, breaking over this 1210 area is an area that has seen some resistance. So 1210 to 1230. If we could break that on heavier than average volume coming into the day, we have the group strength, and obviously this stock is very strong being accumulated. That's BMEA. Next biotech stock we have is DAWN. This is one that I posted on my Twitter multiple times. It had this nice heavy volume breakout here, closed really nicely in the range, but did see that 200-day simple moving average come in for resistance for a couple days. Eventually, we break through that area after consolidating, move up, consolidate again at this $18 area. Another breakout last Friday, closing right at the high of the day, right near the high of the day, 1995. High of the day was 2002. And now we're cleanly building out this pivot at $20. Looking to the left of the chart, you can see that's where the resistance has showed up as well, and previous support. So obviously a very clear area there. Again, my one concern is biotechs have run really strong for the last 3 weeks. This is such a clear setup for basically everyone. I'm wondering if this is going to be one where it breaks out and people immediately sell into that move just because of biotechs are extended in the short term, and this is such a clean entry point. So I will probably be still taking the trade if it breaks through 20, but I want to sell into strength relatively quickly when it does that. Next, we have ENPH. This is in the energy solar group, which has moved up to the third strongest group out of 197 in the market. A+ group strength rating. This has a 96 earnings per share rating, along with a 99 overall composite rating and a 97 individual relative strength rating. All the boxes getting checked on this one. Very strong fundamentals, earnings up 41%, sales up 46%, after-tax profit margins up 25%. Within the group of 21 stocks, this is number 3 on relative strength, number 2 on earnings per share, and number 1 overall composite basis. This is another name that actually saw fund ownership increase from March to June from 1709 to 1728. And then looking at a weekly chart, you can see this has really been basing out since February of 2021. Now, it had this super strong rally up to this point, and after that, we have consolidated, really choppy action, but it looks like we're now starting to come up the right side of the base. For full transparency, this is the stock that I bought on Thursday, right at 200. I think it was 248 was my entry point. And I've sold a quarter into strength already, stop loss under the low on Thursday. And this is a name that it's in a strong group, strong fundamentals, checks all the boxes. So if the general market's going to continue to act well, then this is a stock that I want to keep building exposure into. So with this, I don't want to be buying up here. I want to be buying as it comes back into 200. So if the market, say the market's weak on Monday or Tuesday, and this comes back into 200, but we see buyers stepping in and supporting that action, then I want to kind of add to my position down here at 200, as close to the 8-day EMA and that $200 area as possible, so I can keep my risk equally as tight for ENPH. Next, we're on to EXEL. This is another one that I haven't seen too much on Twitter or StockTwits about, but also a biotech name. It has a B accumulation distribution rating, 96 overall composite with a 93 individual relative strength rating. Fundamentals are actually really strong on this biotech. Earnings per share positive over 100% year over year the last 3 quarters. Sales up 40%, 67%, 32%. After-tax profit margins up about 20%. Overall, out of 798 stocks that make up that biotech group, it's 12th strongest on the composite rating and 75th on relative strength. So that just shows you how strong this group has been recently. Taking a look at fund ownership as well, we are starting to see fund ownership increase from December of 2021, 685 up to 730 now. So right group, fund ownership increasing, strong stock in that group. Going to a weekly chart, this is a stock that just tends to chop around for a long time. It hasn't shown the ability to really trend for a long period of time. So we need to take that into consideration. If we do get a very strong move, like a pretty quick move, that's another one that we want to be selling into, maybe from 22, a potential entry point, to this 2330, 2340 area where we saw sellers step in last time. That's somewhere where I would want to at least take a portion of the trade off and then move my stop up to even, because again, looking at the history of the stock, it doesn't really have the characteristics of running 30%, 40% in a short period of time. So knowing the history and the characteristics of the stock up until this point, we can set our expectations for the trade a little bit better. So looking for a break kind of out of this area over Friday's high, 2206, and then taking some off into strength at 2325. Next, we have INFA. This is one that Javi and I were talking about on Twitter. It's Computer Software Enterprises, 129 out of 197. So not a very strong group, C- group strength rating, but it does have a B+ accumulation distribution rating, and then lower composite and relative strength ratings. Fundamentals have been positive, not a super growth stock, but earnings were flat this last quarter year over year, sales up 9%, but not in the negatives. We are seeing fund ownership increase in the last quarter from 204 to 213, which is nice to see. You don't see that too often in the tech stocks. And out of 126 stocks in this relatively weak group, it's 15th on relative strength and 30 on overall composite basis. Looking at the setup, this is an IPO, obviously, that's starting to work on the right side of the base. It's above all the key moving averages, and all the moving averages are now in the right order. You have the 50-day, the 21, and the 8-day EMA. You had a nice shakeout on Friday, before closing well into the range. And you have 1, 2, 3, 4, basically 4 days close right at the same price. So we're looking for a break over 21.75 as a potential entry point, and we're looking to start to climb the right side of this base here for INFA. Back to the biotechs, this is ITCI. Does not have the kind of fundamentals that we're looking for, not positive earnings per share. Sales are increasing, but after-tax profit margins, still a nightmare for this. This is very much a technical and group kind of setup. We had a really big flush from 66 down to 42. We rally right back up to $60, but you can see 60 has been an area of selling once, twice, a little bit below 3 times, 4 times this past week. And now we're last 2 days just consolidating above the 8-day EMA. Very light volume the last couple trading days, which is nice to see. We're looking for a break over 60 as a potential entry point. If we want to get lower in the space and we think biotech is going to continue its run, then we could take a trade with a break over Friday's high. But I would be a little bit concerned with that because, again, biotech is a little bit extended in the short term, but this hasn't really run out of its base yet. So if biotech needs a couple days to take a breather, that's not going to be the right timing to really press the gas on the upside here. So we want to see ideally a couple more days consolidating and then break this $60 area on heavy volume. Next we have the other solar stock, JKS, and this has kind of a double benefit. It is a solar stock, but it's also a Chinese stock. Both of those groups have been strong, and you can see it in the price action here. Similar to ENPH, this isn't a stock that I want to be buying up at 76, 77, around $80. This is one where if we see market weakness come in, we pull back into the $70 area. You have the rising 8-day EMA and previous resistance, now potentially support around $69. So this is one where I already have a piece in the ENPH. I want to be building exposure to this group that rapidly moved up in relative strength. But I want to be smart about it. I don't want to buy the stock as it's extended up here. I'd rather wait for a pullback and to build around $70 for JKS. The other Chinese stock that we'll cover today is LI, which is an EV stock. That group itself has been relatively strong as well. I know it doesn't reflect here, 180 out of 197. That's just because Tesla is really holding it down at this point. But this stock, A+ accumulation distribution rating, 94 overall composite with a 98 individual relative strength rating. Fund ownership increasing within the group of 33 stocks. This is number 1 on relative strength, number 1 overall composite. Checking all the boxes fundamentally as well. And recently, this had a very nice run from 1882 all the way up through 41.49. Extremely strong, right? Over 100% run. From there, we've only pulled back to the 8-day EMA, and buyers are still kind of stepping in to support this action. So what I'm looking for is a break over this $40 area. Ideally, we get another week would be perfect for this to tighten up under 40. But if the market's acting well, I also don't want to give the stock any excuse, right? So Chinese stocks are holding up well and the market gets going or pushes through that 50-day moving average on the NASDAQ. No excuses for this. It should break out even higher. Going to a weekly chart on the left side of the graph, you can see this is where we kind of peaked before. So it makes sense that after a 100% rally, we're kind of pausing at this point and just deciding, is it time to get going and break through here, or do we need to kind of pull back to $34 area, sit on this previous resistance, or previous resistance, now potential support, and just trade around there for a week or so before then lifting up through 40. And the last stock that we'll cover today is also a biotech stock. It's RPRX. I really want to go to a weekly chart really quick on here. You can see it's a relatively new IPO, June 2020. From there, we're just starting to work on the right side of the base. You can see the relative strength has hit a new high on the weekly chart. Not the case on a daily chart, just because the last couple days we've pulled back while the market has pushed higher. But still, a stock that I want to have on my watch list because it's got a B+ accumulation distribution rating, 90 overall composite, 94 individual relative strength. And really this price action these last 2 weeks where we rally from $37.44 up to $44. We pull back to the 8-day, then push out once, twice, and then we kind of just consolidate still above the 8-day EMA. So with this, looking for a break over 43.50 as a potential buy point. Try to kind of run above this pivot at 45 or get in a little bit earlier so we can manage our risk against the 8-day and the low of Friday's candle, which was 42.56 for RPRX. And that's going to be the breakout watch list for July 11th to the 15th. If you guys enjoyed this video, please do me a favor and leave a like and subscribe to my channel. I make this breakout watch list video every Sunday along with other trading related videos. A big thanks to MarketSmith for sponsoring this video. MarketSmith was the trading research platform that we were using to break down each of the setups. If you enjoyed that platform and want to give it a try yourself, there's a link in the description below. And finally, if you want to hear more from me, you can follow me on the other social media sites. Twitter, I'm at Nick Drendel. StockTwits, Facebook, TikTok, Instagram, all those others, it's Nick_Drendel. Have a great week and I'll see you guys in the next video.